Hello, we are the Thomas family, and this is our last video blog of the contest. So we thought we would just start by saying thank you to Summit Credit Union and our coach and our dog. And just really, I don't know, we really appreciate getting to be a part of this, and we've learned a lot along the way. So we thought we'd share with you some of the steps that we took to get where we're at today and our plan for the future for this next year. So anyway, all right, we'll start by the steps to paying off our debt that we took. Number one, we put $1,000 into an emergency fund, which, you know, is kind of a financial thing across different schools of thought. But what it does is it helps you to not have to put money into or onto credit cards. Instead, there's a little bit of an emergency fund. So let's say something like what?
Car breaks down, washer and dryer stop working, refrigerator, you need to call a repairman in, you know, neighbor throws a baseball through your window, just anything like that that you just unexpected but has to be taken care of immediately.
Yeah.
Then those are things where you're like, okay, I don't want to put it on a credit card. This is what the emergency fund is for. You know, you pull it out of that savings account, you go ahead and take care of those things immediately without having to worry about your day-to-day expenses like your groceries and your gas and everything else.
Yeah.
And then you just go back to putting money back in there when you can.
Yep. And then number two is setting up a budget. This was the most vital thing for us. So, and probably the most life-changing thing, wouldn't you say, during the contest?
Definitely.
So we put, we not only gave every dollar a name, we actually used our Summit Credit Union app to make sure that we were tracking those expenses and more or less the variable expenses. So you can always set up a budget and you know exactly, you know, how much your mortgage
and your utilities and
yep.
Just the things that every single month are the same no matter what.
Right. Our biggest problem going into this contest was not watching what we were spending all those extra expenditures and variable expenses like gas, groceries, personal, like getting a haircut, some of those things that just, there wasn't really a name given to them. And so therefore we were overspending every single month on that kind of stuff. So what I really liked about the Summit Credit Union app is that it could actually track not only our accounts that we were using, like our debit account, it will also track, you can put your credit cards from other companies on there. You can put your loans that you have, even your car loans that you have, and start watching, you know, the balances on that go down as well.
Definitely.
So yeah, so that was like our number one thing. Number two is starting that debt snowball. You know, the snowball is kind of the key word. If you think about an avalanche, as it goes down, it keeps picking up more and more snow. And that's kind of how paying off debt should work. So we paid off our smallest debt first. So we had a couple credit cards that had some very small balances on them. We paid those off right away. And then we took all of that money and started paying off our big goal, which was our home equity line of credit that we started a couple of years ago. Well, 19 months ago, we paid off in 19 months when we did our basement remodel. So that was really tough to pay off in the 7 months because we had to put everything we could into that monthly payment. And that was a lot. It was a huge stretch. But now that that's paid off, we have this great sum of money that we can now, you know, put more towards the kids' college or decide together what we want to
start saving for.
Exactly, like our 25th wedding anniversary this next year. Yep. And then finally, or actually I have two more, sorry, accountability. That was another big thing for us. Just like when we go to a gym, you know, I go to a gym that has other people at it, or I was going to a gym that had other people at it, so that people would hold me accountable. Finances are no different, right? So our coach, which if you belong to a Summit Credit Union, you can have a coach, it's free. And they're just somebody you can set up a quick meeting with to be able to just hold you accountable, see where you're at. Are you tracking right? Yep. What are your goals? What do you want to accomplish?
They can help you set your goals and then track those to make sure that you're reaching those goals. And then, you know, they make suggestions on, okay, if something changes in that time period before you reach your goal, it's like, well, okay, how do you make those adjustments to still reach your goals and still deal with those shifting and changing life events that happen.
Right. Yep. And then always resetting that. I liked how you said the changing life events. Like we had a kid go to college. We had, I had to have a surgery this year that I never would have expected to have. And so we constantly have to go back to that budget and readjust stuff because expenses in life does happen, right? And then finally, just only use credit cards if you already have the money in the bank to pay it off. And so there's a caveat to that. And if it's already budgeted, I think what happens when people use credit cards is that they overspend and then they're kind of going back and saying, oh, wow, look what I spent. Again, using those, if you are going to use a credit card, let's say to buy groceries, that credit card needs to get pulled into whatever app that you're tracking your variable expenses, because again, you don't want to overspend on your groceries just because you're using a credit card and getting points. Those points will not do you any good if you are overspending your budget every month. So,
because we did try that. We did try using a credit card and we found out that we were overspending. Even when we set up our budget, we realized, well, if we wait until the end of the month to say how much we spent, oh my gosh, we're going over.
Yeah.
So we did another adjustment and said, well, let's actually track it week to week. And the Summit app allows you to do that, where you can say, okay, we're only going to spend so much this week and then the next week. So we were able to budget better.
Yeah.
Even if we're going to reduce it to a shorter time frame, it was very easy to make that adjustment on the budget.
Yeah. And the whole other thing that's been really cool is just, our kids have kind of watched us go through this, and even they are, well, one of them is being a little more conscious with her money, and just saying like, hey mom, we shouldn't go do that. We don't need to spend money on that. And it's just really neat to see that change in them too. So, all right, what have we accomplished?
Okay, accomplishments so far. So, one, we paid cash for 2 vacations. So we had one budget where we take the family up north every single year for a week. So we were able to do that. And then the second was when we sent our kid to college, we decided to extend that a little bit and spend some time going cross country, visiting different landmarks and different things along the way. And so we paid cash for that, which was really neat. We paid cash for Christmas. So this is the first year that we actually budgeted for Christmas and said we're going to put money aside for that. And we did. So now that Christmas is over, it's done. But zero debt, no credit cards. There was nothing that we actually have to now pay off in January and February. So that is awesome. Yeah. We helped our son pay for college. He's got the responsibility partially, obviously, to pay for part of his. And we agreed that we would pay a portion for ours as well. So we were able to do that. We paid off, whatever credit cards we had, done, gone. We still have them, but we're not using them unless, like we said, unless it's in the budget and we can get points and then find rewards down the road for that. A biggest one for us, we paid off that home equity line of credit. That was a big one when it started. Like I said, we remodeled part of our house, so we used the line of credit for that. So to be able to get that now completely clear, that's a huge weight off for us. Another thing our coach had advised us on was to put more money into our 401k savings. So we actually doubled the amount we were contributing to our 401k, which is obviously going to help us down the road and increase our savings when it comes time for retirement. We also we continued to tithe. One of the things that when we started this is we said, you know what, that's important to us. We're going to continue to give 10% of everything we have to different charities, to churches, to organizations that we believe in, we want to support. So even with all that we've done, we've still been able to do that, and it doesn't really, I haven't noticed any effect on our lifestyle, our budgets, or anything. In fact, if anything, it's been so much better. So that's been a huge thing for us. We've also been able to set up several savings accounts. In order to do this, you got to have, we have a Christmas savings account. We've got a vacation savings account. We have Joey's college education savings account. We've got our general, we have emergency funds. So
taxes.
Our tax savings account. So you can set up all these different savings accounts so you know exactly how much money you have in each budget for these things that you're saving for long term. And then lastly, we stuck to our variable budget. So at the end of each month, being able to track our variable budgets and say, okay, our gas, our groceries, our extra expenditures, and all these things that from month to month just jump around. Whatever was left over in those budgets, we just swept that right into savings, and we could put that towards our Hawaii trip, or our additional savings for Christmas, or pay a little bit more on other home improvements, other things that we want to accomplish, maybe in the short term.
Yep. And then finally, our goals or plan for 2020, keep meeting quarterly with our coach. So we literally are going to set up meetings and go in and meet with Jamie still 3 times a year. And then stick to our budget and pay off our final car loan debt. So because we were really focused on that large debt that we wanted to get paid down, we have 2 more loans out there, and those are on our cars. And so we've already decided what we're gonna basically take now from what we were paying on our home equity line of credit and disperse that to the 2 car payments, so that can get paid off much faster than we would have probably paid them off in the past.
Right.
And then we're also going to continue using our savings to put money into, so save to spend, which means basically you are going to spend that money on something. So we want to make sure that we are saving at first in order to pay for something. So in other words, our house probably will need some new carpet in the next year. And in order to do that, though, we want to make sure that we're setting money aside each month to pay for that. So when the time comes, we say, okay, next December, we're putting new carpet in our house. We have the money. Let's go pick out, sticking to our budget for what we, have saved for, and then get that installed. And yes, it does going to wipe out that savings, but that's exactly what its purpose was for, versus putting stuff on finance. So yeah, I think those are our goals. We're super excited what we've learned throughout this whole process, and really glad that, we've kind of set these new goals, and I think we're going to stick to them this time. But we should probably check in a year and just let you know how that goes.
Yeah, this is the challenge for us. When we started this journey, I think we've said in the past, we've had experience paying off debt. We've been there before. So now the challenge for us is to stay on track.
Yep. So thank you, Summit Credit Union. Thank you, Coach Jamie.
Thank you.
We appreciate all you've done. Merry Christmas.